What's going on, everyone? I wanted to repost this video, which is from the course that I offer. This is the only video from there that I'll ever post on my YouTube. It's underrated and it's something that every trader can relate to and learn from. So I would appreciate it if you do learn anything by the end of it. If you could just drop a like and subscribe to my channel. And if you want a very good trading resource, I'm going to link my Instagram in the description below. I post daily trading recaps on this, along with very good trading tips and tricks. Link in the description below. And without further ado, let's get right into the video. Now, this may not make sense at all at the start, but all I ask is that you keep an open mind to what I'm about to tell you, especially if you feel like you're missing out with something to your trading and you cannot find the success that you would like to have after all the hard hours of work that you've been putting into the markets. The main point about this recipe is trading is all about you. There's an equation that I look at for trading, and that is market understanding times you equals profits and results. Those are the two variables I look for. So let's say you understand the market 100%. You know the best strategy, you know how the market moves, you know the structure, you know supply and demand. But if you as a trader, if you're not operating at 100%, let's just say in this case 50%, then you're only going to see 50% of the results. This is why a lot of traders can read a chart, they know technicals, they know support resistance, and they still fail at trading. They do not have themselves lined up. They understand the market, but they're only operating at 50%. They might not have their emotions in check, and they don't even know themselves as a trader and what their feelings are while they are trading. So now let's flip the numbers around and say you are operating at 100%. So the U aspect is running at 100%, but your understanding of the markets is at 50%. 50% meaning maybe you don't know how the markets move, you don't know the structure, etc. The results with this scenario and this equation is going to be the same exact thing. You're only going to produce 50% of the results. Both outcomes are the same. So that's why it's equally important to learn the U component to trading as it is to developing a strong market understanding. The U component is just as strong as understanding how the market works, what the market's going to do. So true trading success comes from within oneself. You first need to have an understanding of the market, a proper trading system, etc. You have to know the structure, you have to know supply and demand, what moves the market, what moves price. Then once you have that, then you're going to get closer. You just moved one step closer to the finish line of trading, and the next component that you have to complete and understand fully is you. And it only comes from you and you only. So anyone can look at a chart and attempt to predict where the market's going. It's very easy for me to share all my knowledge to another trader. It's very easy for me to pass on my exact strategy that I use, my entries, my exits, all the information that what I believe the market is going to do next. Then after I share this information with that trader, we both accurately read the market, we both extract profits from the trade, but the other trader that I shared all this knowledge with either made little money compared to what I made or lost money compared to what I've made, because we don't have the same mental attitudes, we don't have the same mental capabilities. We both had an understanding of the market, but we lacked the same mental attitudes. And in this case, the mental attitudes of the winning trade was much more important to success than the system that we used to make this winning trade happen in the first place. So if you adopt the U component to trading, then you're going to be able to see results with any system. But lacking that U component to the equation, even while having the same market understanding, you're going to have trouble seeing the same results as other people that have the same understanding as you with the market. So in my opinion, every trader has one job, and that job is to find consistency. Since when you have consistency, you're going to have results, and when you have results, you're going to create longevity in trading, where every day you're going to be able to take profits out of the market, and you're going to be able to sustain for the long run. You have to be able to observe the market, you have to be able to see it develop as it forms, and you have to create a proper trading strategy and plan around it while this is all happening. Then you, as a trader, have to be the one who pulls the trigger. You're the only one that's going to click the buy and sell button, nobody else. You have to take low risk, high reward trading setups and nothing else. That is the market understanding component. So those two variables, observe the market and take low risk, high reward trading setups, is the market understanding component. Now, the next two components are keeping your emotions under control above everything else, while leaving your opinions about the market out of the picture. Now, that is the U component. Without all four of these components, it's going to be very difficult to create consistency in the long run of your trading career. It's going to be tough. You might have winning trades here and there, but if you do not have both of these variables in the long run, you're not going to see consistency. I highlighted keeping emotions under control and leaving your opinions out of the picture because, in my opinion, that's the most important concept that traders do not focus on. They're too focused on what the chart is telling them, what is going to happen next, and they're too opinionated on what they feel the market is going to do after their analysis. They're not focused on the emotional aspect to trading, the mental side and the psychological side to trading, where that is the most important, in my opinion. So one of the major weaknesses as a struggling trader has is letting his opinion or her opinion take over the bigger picture of what the market is doing or what's telling. So the best traders are the ones who listen to the market and follow what it's saying, and the worst traders and the struggling ones are the traders who watch the market move and they let their opinion control their voice, and because of their opinion, they rationalize the situation because of it. So let's just look at a quick example, and let's just talk about COVID-19 and how the markets have been rallying amid all the COVID-19 cases, amid all the poor job numbers, and even the economic shutdown of our economy. So as an emotional-based trader who trades based off of feeling and emotions, they would be 100% short the market because it makes sense. They're also going to be the ones who are going to regularly lose money if they do not pay close attention to what the market is saying amid all of this bad news. One who listens to the market and observes its actions would know to stay away from the short side, since all of these negative news catalysts have not been affecting the market as of recently. A perfect example of a good trader listening to the market and observing, following what it's telling us, and leaving our emotions out of the picture is this. So from a technical standpoint, we are making lower highs, we are making lower lows, and at one point the market is selling off. However, we have a demand imbalance down here at 4,107 and 3/4 on the S&P 500. So from a logical and a rational trader that's listening to what the market is telling us, we are selling off, but we have a demand zone below us. So from a supply and demand perspective, we would not be able to take the market short because this is an area where the market has a high probability of bouncing, and it gives us a proper trading setup with low risk. But a trader that really doesn't understand this and watches the market move and lets their intuition or their opinion rationalize the situation, if they did not have this demand imbalance down here at 4,107, they would think it's the end of the world, the market's selling off, I'm going to short the market. So from a trader that's going to lose perspective, we're short the S&P right here. However, if we do what the market is telling us, we're ignoring all the other noise. A smart trader that leaves their opinions and emotions out of it would be long the market right now and could have had a very low risk trading setup down here at the lows from this demand imbalance. So the key is just letting your opinions and your emotions out of the picture. They're your greatest enemy. Listen to what the market's telling you in the present moment. All habits of a bad trader do not stem from their understanding of the market. Instead, they stem from letting their own emotions control the situation. The markets continuously change throughout the day. It's always throwing different variables at us. You have to be aware of the constant and evolving, rocks that the market is throwing at you. It's very easy for your analysis of the market to be skewed based on what you think will happen next. You can change your analysis. You could hold on to losing trades much longer than normal. You can let go of winning trades faster than normal because of your analysis being skewed based on what you think is going to happen, based on your emotions and your opinions. So you have to start focusing on factual information, not off those emotions. Start taking what the market is going to give you and make your analysis based off of that. If you make your analysis based off of anything else, then your observation of the market is going to be skewed, and you're going to let your anger, your fear, your greed, and your hesitation, overconfidence, etc. All these types of different emotions, you're going to let them control your decision making and viewpoint of the market. And you cannot let that happen. Your goal is to trade as systematically as possible without letting you control your decisions. Your survival as a trader is always at stake, and because of this, it's very easy for you to get into situations that your decisions are not going to be established from reason or logic, but they're going to be established from your emotions and what's going on in your brain. So it becomes easier to observe the markets when your emotions are not involved. If you look at the markets with anger, fear, greed, those emotions are going to overcomplicate your decisions, and they're going to overwhelm your market understanding when the stakes get high enough. So the only way to solve this is understanding you. If you don't control your emotions, you're going to complicate the decisions that you make out of the market. You're the only person that's going to understand you, nobody else. You cannot ask help from a friend. You cannot ask help from anybody else. You're the only one that's going to provide those answers, and you only. You can learn a strategy from somebody else, which I highly recommend, but you're not going to learn yourself from anybody else. It's weird to say it, but you are your greatest opponent. Look at your patterns in behaving during your trading. You know, when you win, do you feel euphoria? Do you feel like you're on the top of the world? Does your fear of holding on to a loser affect your judgment? Are you nervous before you put a trade on? You know, do you turn good days into bad days? Do you have a bad day and do you turn it into a good day? You know, whatever you're struggling with, you have to understand it for yourself. You have to study yourself and learn to accept that you are your greatest opponent. Learn from your mistakes, fix them for next time, and that will enable you to grow. You know, what are some trading habits that might repeat themselves? Do you see a common denominator between your winners, your losers? And you have to be aware of your emotional patterns. Learning from one's experiences and mistakes is not an easy process. I can tell you that right away. You know, a lot of traders fail because they're not focusing on the emotional aspect to this. They're focusing on only what the chart is saying. So it's not an easy process going from charts to studying your emotions and your experiences. It's so much more than the charts. It's more about you. It's only going to be available through hard work and discipline. I can tell you that also right off the bat. You're going to develop yourself as a successful trader with hard work and discipline, and you're only going to improve you more as a trader than yourself. You have to come face to face with yourself, and you have to build up the you component to that equation that we just talked about. Once you build up that you component, you're going to start seeing results in your trading. And believe me, the market understanding part is the easiest part. So one more thing I want to say before I wrap this video up is that having a losing trade is not going to define your success, and it also does not equate to an error in your trading abilities. I see a lot of traders, they try to avoid losing trades. They think they're failing because they have a losing trade, but losing is a part of the game. It's normal in trading, and if you cannot accept losing, then trading obviously is not for you. It's the hard truth. Losses are definitely normal. Everybody has them. And a reason why traders don't want to take losses is that it's a natural human function to try to protect yourselves from pain. You know, once you realize that there's no pain in losing, you can easily take a loser and you can learn from it. And when you learn from it, you build upon it, and you could build up your winners, and you could, weigh out your losing trades, seeing what you did wrong and growing from that experience. My biggest, thing that I look at when taking a losing trade is that it's not a losing trade if I learn something from it. A losing trade is a winning trade if you learned anything from it, and you cannot consider losing trades bad. They are part of the game. I hope you guys enjoyed this video. Please subscribe if you learned something from it. Share this message. This is a message that I think every trader should understand. This is something that a lot of traders do struggle with, and I hope we can get over this hump together as a community.